tax implication of selling property in Nigeria. I remember my humble self, Charles Tukumakwaka Esquire, a renowned property lawyer based in Lagos, Nigeria. Hello and welcome back to my channel, Chaman Property Lawyer, your #1 channel for property law and real estate education in Nigeria. Today, we will be talking about something that affects almost every property transaction, but is often overlooked: tax implications of selling property in Nigeria. Whether you're a landlord, an investor, or a Nigerian in diaspora planning to sell property back home, this guide will help you understand the taxes you must consider before selling, so you don't run into legal and financial troubles. Please, that's why this channel is specially made for you. Why are taxes important in property sales? Do you know? Whether you are selling a property, you are not just transferring ownership. You need to know that. You are also creating a taxable transaction, which you must pay. Understanding these tax obligations will help you budget properly, prevent government penalties, and ensure your sales is smooth, legal, and recognized. With that, what do you think? Is that not a good thing? Major taxes payable when selling property. You need to know this thing. 1. Capital gain tax, CGT. This is the main tax when selling property. It is usually 10% of the profit made from the sale of the property. Example, you bought a property for 20 million. You sell it for 30 million. Your gain is 10 million. Capital gain tax is 10% of 10 million. That's 1 million. And that's what you pay. Note, expenses like legal fees, survey fees, agency fees may be deducted before calculating that. If you don't know, you end up paying based on the thing and you won't know. Number 2, stamp duty tax payable on deed of assignment or any legal document transferring ownership of property, usually around 1.5% of the property value. This is typically paid by the buyer, but in practice, the parties can negotiate who bears the cost. That's very important. You need to know that. Number 3, withholding tax, WHT, on the rent, if applicable before sale. If the property was rented out before selling the property, any outstanding rent collected may attract withholding tax. Most people don't know about this withholding tax. Number 4, personal income tax. This is for individuals. If you are an individual selling property and earn rental income from it, you must declare it as part of your taxable income. It's not me that made that, it's government. Now, the 5th one, company's income tax for companies only. If a company owns a property, then any gain or income from the sale will be taxed under the company income tax. They have a company income tax act. Take note. Practical examples of property sales transaction that will attract tax. Let's say you bought a commercial property in Abuja for 50 million for 5 years ago. Now you are selling the property for 80 million. Gain, 80 million minus 50 million equals to 30 million. Capital gain tax is 10% of that 30 million, which is 3 million. Stamp duty, 1.5% of 80 million. That's 1.2 million normally paid by the buyer. So, as a seller, you must be prepared to pay 3 million capital gain tax and ensure that all other taxes and documentations are properly handled. You won't have any issue. If you don't know, you make mistake. Consequences of ignoring taxes in property sales. For those of you, your transaction may not be recognized by the government. You may face penalties and interest on unpaid taxes. The buyer may have difficulties perfecting title in the future. Banks and investors may reject the property if taxes are unpaid. So why not pay it? Why not pay it? Or why not they get professional to help you to do that? Practical tips for sellers. Number 1, consult a property lawyer before finalizing your sale. Keep record of all your purchase prices, expenses. They reduce your tax liability. Budget for capital gain tax when fixing your selling price. Number 4, negotiate clearly with the buyer or who bears the stamp duty and legal fees. Pay promptly to avoid penalties and legal issues, because if you don't pay on time, you have accumulated penalties. And some people don't know all this. That's why I'm educating you on this. And finally, selling property in Nigeria goes beyond just collecting money from buyer. The government has a stake in every property sale, and that stake is called tax. You must pay, you know the sweets. The major one is capital gain tax of 10%, but you should also be aware of stamp duty, income, and the incidental charges. By understanding and complying with these obligations, you will protect yourself, your buyer, and your property transaction. Very important. Because if you know ignorance of law is not an excuse. Did you find this video helpful? Then please like this video, drop a comment, and share your experience with the property sales. Share this video with your friends and family. And most important thing, subscribe to my YouTube channel, Chaman Property Lawyer, and turn on the notification bell so you will never miss any of my weekly property and real estate law guides. Also, Follow me on social media platforms, Facebook, Instagram, LinkedIn, TikTok, Chaman Property Lawyer, for daily tips and professional advice on property transactions in Nigeria. Thank you for watching to the end of this video, and I will see you in my next episode.